Now, at this point in the stock market, newer investors especially are almost doing themselves a disservice by not utilizing low-cost, high-quality, well-diversified, dividend-paying ETFs that offer exposure to basically all the best stocks in the world. And this is especially because in your early days of investing, stock picking stocks one by one is going to be confusing, and there's a lot of mistakes to make, which is why I think buying into high-quality, low-cost ETFs is a much better option, especially early on. Now in this video, we're going to go over 3 of my favorites, some of the best low-cost Vanguard dividend-paying ETFs that I think could be a perfect foundational position, either all of them, one of them, whatever the case might be, especially for newer investors. So if you're a long-term investor looking to have exposure to some of the best ETFs in the market, make sure to stick around, drop a link down below, and let's look into the first one. Real quick for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, the first low-cost Vanguard ETF, this is one of my favorites, and this is actually inside of my portfolio as we speak. I'm talking about ticker symbol VIG, or the Vanguard Dividend Appreciation ETF. Now, it says right here on the website, VIG seeks to track the performance of the S&P US Dividend Growers Index, passively managed full replication approach, remains fully invested, in large cap equity, emphasizing stocks with a record of growing their dividends year over year. And if you look at the top 10 holdings in VIG, out of the 339 stocks you're getting access to, that you're getting instant exposure to when it comes to buying into VIG, you're getting exposure to things like Apple, Microsoft, Broadcom, JP Morgan, ExxonMobil, United Health Group, Visa, Procter & Gamble, Costco, and MasterCard. Now, every single one of these holdings, at least for the most part, the top 10 at least, have all grown over time, paid more and more in dividends over time, etc. To be specific, VIG is up over 264% since around 2006. This ETF just keeps on growing year after year. Also, VIG is currently offering around a 1.81% trailing 12-month dividend yield, so you are going to get some decent cash flow from buying into VIG from day one. But here's the magical part here. 8% dividend growth rate, 11% dividend growth rate, 10% and 8%. Over time, VIG, even if the dividend isn't that big to start off with, VIG has been paying investors more and more cash flow basically every single year since inception. Now, for those reasons, along with the fact that VIG only costs 0.06% as far as an expense ratio goes, VIG is in my portfolio and I intend to build out a large position in this one later on. Another one of my favorite super low cost Vanguard dividend ETFs is VYM, or the Vanguard High Dividend Yield ETF. Now, VYM's product summary says, seek to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. And to give you an idea of some of the top exposure you're going to receive, when you buy into VYM, you're going to get exposure first of all to 553 different companies, which again, especially for newer investors, diversification is going to be key. Buying into a single stock, a single company, especially when you're just starting to understand investing, that is going to be risky if you ask me, and I made plenty of mistakes in my early days by doing this. But instead, by buying into something like VYM, having exposure to things like Broadcom, JP Morgan, ExxonMobil, Procter & Gamble, Johnson & Johnson, Home Depot, Merck, abbvie, Walmart, and Bank of America. Exposure to different companies that have been trading for a long time, that have been growing consistently and paying more and more in dividends historically. To be specific, VYM is up around 136% as far as just price return goes, and this is since around 2006. VYM also offers a pretty massive starting yield at around 3%, starting with around 6%, 5%, almost 7% dividend growth historically. So even though you're going to receive a pretty hefty starting yield when it comes to VYM, you're also going to get some exposure to some massive dividend growth, at least investors have historically. Now, VYM, just like VIG, has an expense ratio of 0.06%. These ETFs are more or less almost close to free to hold on to, which is amazing because, like I said, with a single click of the button, you're getting exposure to some highly vetted, high quality single stocks, all in a massive basket inside this ETF. Now, the last of the super cheap to hold on to Vanguard ETFs that I think could be an amazing foundational position. This is more of a growth one, although it still does pay a dividend. We're talking about VGT, or the Vanguard Information Technology ETF. Now, this ETF says it seeks to track the performance of a benchmark index that measures the investment return of stocks in the information technology sector, passively managed, and includes stocks of companies that serve electronics, computers, that type of thing. Now, with VGT, you are going to get exposure to some of the fastest growing companies and some of the higher beta names. So this one is going to pay you a little bit less as far as dividends go, but does have the potential to grow a lot faster, at least it has historically. Now, the top names in this ETF are things like Microsoft, Apple, Nvidia. We got Broadcom, AMD, we have Adobe, Salesforce, Oracle, Qualcomm, and Applied Materials Inc. Now, the growth that VGT has seen over the past 20 or so years is unexplainable. Over 1,000% of price return, and this is over the last 20 years. Now, even though VGT does pay a small dividend, it's about 0.5%, it still is a growing dividend and it has grown over multiple timeframes historically. As far as a low-cost technology information ETF, with exposure to some of the fastest growing companies in the entire world, VGT is one of my favorite across the board. So there we have it, those are 3 of my favorite low-cost Vanguard dividend paying ETFs that, like I said, I think could be a perfect foundational position in any long-term portfolio. Now, I've talked about this time and time again, but especially for newer investors out there, I think it's a great idea to look into ETFs, and this is because of the instant diversification, and this is especially the fact that so many of these ETFs are so cheap to hold on to, relatively speaking. Now, like I always say, after you build the foundation in your portfolio, I have absolutely no problem with buying some single stocks, even some names that might be a little bit more or less risky, but building out a foundation in your portfolio that gives you low cost exposure to some of these popular, high quality dividend paying ETFs is something that I doubt any of us are going to regret later on. But now lastly, I have a question for you guys down below. As far as building out a foundational position in your long-term portfolio, what are some of your favorite ETFs you'd recommend? Drop some of the ticker symbols in the comments down below. If you enjoyed this video, make sure to please drop a like and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.